Hi, this is Soumya Sarkar from Redefine. Now we have seen a war in the Middle East have broken out. The war between US, Israel and Iran, including some part of Lebanon, has actually made whole world shake up. Sudden war has increased the oil price and lot of gas has now been stopped from Qatar to rest of the world. So when this kind of thing happens, usually the market reacts negatively. And we also have witnessed that due to this war starting and no ending in sight, obviously all over the globe, the market has reacted negatively. Because when there is a business disruption happening, definitely the earnings of the company goes down, and that is the reason the market reacts negatively. Now if you see, the oil prices are almost $100 per barrel, and that is something which is very, very exceptional, because few weeks back it was trading something around $60 to $62 per barrel. So when this kind of increase happened, obviously the economies who are importing oil, also the economies who are dependent on oil, that are going to suffer a lot. Now, in this time, you may see your portfolio has gone a little bit of negative. Now, how do you navigate through this time? See, the basic way to, number one thing which comes to my mind is that you must keep a liquidity for 6 to 12 months at this point of time for your expenses. You do not know what kind of things may happen, how many companies will suffer loss, and there may be a job loss. As well as recent AI revolution can also increase the job loss. If you look at the US data in February, we can see that US job loss has gone up. So that kind of things may happen also in India, and it is always advisable, despite job loss or no job loss, keep 6 to 12 months of liquidity in your portfolio for any immediate requirement. Second thing is that please treat the asset allocation very well. People who are having the old money must go for the asset allocation. Usually people do not go for asset allocation, they only chase the returns. But if you only chase the return, you may end up with a wrong product at this point of time. It is better that you buy cheap in equity, but you must follow a proper asset allocation. Third thing, which is very, very important, is do not stop your SIPs at this point of time. The concept of SIP is basically that buying at a different kind of levels. Now the market is lower level, so you will get more units because the NAV is low. So this is the time when you should continue the SIPs on a regular basis. Fourth thing which comes is that take a proper understanding about how your portfolio is going to navigate to the long term. Suppose if you have a 10 years view or 15 years view on your portfolio, then I don't think you need to be worried about it or something, because this kind of event keeps on coming. If you look at in 2013-14, the bond market shake-up had happened. Then 17, there is another thing happened. Then in 2020, COVID happened. In 2022, Russia-Ukraine war happened. And every time it recovered. I can clearly remember that in the Kargil time, market was gone down by approximately 8-9% at that point of time, but recovered it within 4-5 months. In the COVID time, it had gone down by 20%, but recovered it in 4-5 months. Same thing happened with Ukraine war, when market one day the Nifty gone by 5%, but it recovered eventually. So recovery will definitely going to come, but please stick to your principles and investment philosophy so that you don't have to see any problem in terms of your portfolio. Thank you for watching this video. You can subscribe to our channel, like the video, and share it with someone else. Thank you for watching.